Singapore's inflation rate fell last month as housing and transport costs eased. The consumer price index rose 4% from a year earlier. That's down from 4.7% the previous month.
Inflation in Singapore has eased. For the month of October, transport cost increases moderated to 8.3% from the previous month, while housing cost increases slowed to 6.8%. The core inflation rate, which excludes transport and accommodation, also fell to 2.2%. Still, the relief for consumers may be short-lived, with plenty of upside pressure expected into 2013.
Judging from the latest COE auctions, some of the categories have went back to fairly high levels, and two categories went up to record high levels, and that will mean that there might be small upside pressure coming in from the private road transport component.
Service-related segments are also a growing concern. Healthcare costs peaked at 5.2% in October, the highest since mid-2008. This is compared to just 1.8% a year ago.
These are things that are really not susceptible to supply shocks. They're really driven by demand, and they're up this year compared with a year ago. So that to me suggests that that inflation expectations actually are elevated in Singapore. So that, I think, does put a bit of a dampener on how quickly we'll see inflation coming off here.
Economists say the central bank is unlikely to adjust monetary policy on the basis that inflation eased in October. Rather, expectations of higher inflation next year will probably mean no change to its tightening bias for now.